Well, the backdrop for Australia's trading session looks positive. US stocks are rallying. Bitcoin has moved back above 91,000 US dollars, and the market's fear gauge, known as the VIX, has fallen from its fresh highs, while the S&P 500 ETF, the SPY, is charging in after-hours trade. It's gapped high, which is a positive indication. Today is April 23rd. My name is Jessica Amir. You're tuned in to the Market Daily. It's great to have your company. So why has the narrative now shifted for good measure? Well, it is for three key reasons. One of those is that, firstly, we do have hopes that the White House will seal a deal with top economic partners. Not only did US Treasury Secretary Scott Bessent hint that a China deal could be possible, meanwhile, we heard JD Vance actually cite progress towards a potential trade pact with both Japan and India. Secondly, we are seeing better than expected company news come out. So far, 18% of the S&P 500 companies have reported results, and they've been better than expected. So that is supporting positive sentiment. And the third reason that stocks are charging is because Trump said he will not fire Jerome Powell. That's the chair of the central bank in the US, the Federal Reserve. Well, we also did hear positivity from some Fed speakers overnight, saying that the US may need to cut rates. So all in all, political tension is dying down, and we're seeing the market go back to focusing on the basics, what's important, and that is company earnings. So where are we now? Let's take a big step back and just really think about where we are now. So US tech stocks, they're still down 17% from their record all-time highs that we hit back in February. The Aussie market, it's still down about 9% from its February record all-time high that it hit on Valentine's Day, remember? But remember, despite all the noise, we need to remember that after every single market crash and a major pullback, the S&P 500, the Nasdaq 100, and the Aussie Sharemarket's ASX 200 have recovered. Now, tech stocks, they cop the biggest and the heaviest hits, but that also means their rallies on the way back up are the strongest. So I want you to consider this now. Bear with me. So the Nasdaq 100 crashed 83% in 2002. It crashed 53% in 2008. It crashed 34% in 2018. Remember, that was the first Donald Trump-induced trade war. And the market crashed 30% in 2020. But after each of these single crashes, stocks rebounded and hit brand new record all-time highs. Now, here, note this: if you invested $10,000 in 2002, you'd now have $227,000 today. Or if you were lucky and chucked in $50,000 into that crash of 2002, you'd now have a massive $1.12 million. So there's a lot to be said about time in markets beating timing the markets. I didn't say that phrase. Jack Bogle did, who was the founder of ETFs, of course, the founder of Vanguard. Let's move on to some key company news that you need to be across now. Let's talk about Tesla. Well, Tesla shares are charging in after-hours trade. They are kind of up about almost 5% at the minute. Now, Tesla shares are charging for three key reasons. Firstly, we've got to remember that the White House said that they could make a deal with China. That's a big deal. Remember that Tesla makes 21% of their revenue from China. The second reason that Tesla is charging is because Musk plans to spend a lot less time at Doge from next month, maybe 1 to 2 days a week, depending on how much is required by Donald Trump. So that is assuring to investors, particularly those who've been nervous about the amount of time that Elon Musk is spending on other projects, taking away his time from Tesla. Now, the third reason that Tesla should be on your radar is this. Tesla posted poor results, but the market's looking definitely past that. Let's just cover the key things that you need to know. So Tesla's revenue dropped 9.5%, or 9.5% more than expected, I should say, from $25.71 billion down to $19.3 billion. So it's clear to say that it missed expectations. Earnings per share, a major miss as well. Earnings per share missing expectations by almost 40%. So a terrible, disastrous miss. But there was some bright spots. I guess you could say a rose between the thorns. A key metric that we look at is its gross margin or its profitability. Now, this was pleasing to shareholders. Tesla's gross margin rose more than expected. So very good news there, basically showing that its profitability obviously rose. So a small win amid the pain. So it is worthwhile keeping an eye on Tesla shares. So do keep in mind, I'm just going to call out some interesting quotes now that we did hear from Elon Musk. He was basically urging Tesla shareholders to focus on mass autonomous vehicles and their humanoid robots, which they call Optimus. He's targeting 1 million robots per year will be sold and made by 2030. On the call, Elon Musk said that Tesla will be the most valuable company in the world by far, possibly worth more than the 5 most valuable companies combined. So he's pretty bullish on his own company, to be fair, as most CEOs and founders would be. But I think what's really telling is that Elon Musk is really encouraging people to look beyond the bumps and the potholes, just literally reading out a quote now. I'd encourage people to look beyond the bumps and potholes of the road immediately ahead of us and lift your gaze to the bright, shining citadel on the hill, some renegade-esque imagery, and that's where we're headed. That's what Elon Musk said. Another key takeaway is that autonomous vehicles and its robot business probably will start to make a meaningful difference to the company's bottom line in the second half of next year. And remember that a company's share price is not only driven by its earnings, but it's also its future earnings growth. And Elon Musk said that's going to exponentially grow. Estimates, Wall Street estimates are also really telling. Now, Elon Musk saying one thing and Wall Street estimates saying another thing, they're actually now in unison. So market estimates are now suggesting that revenue growth will be 20% in 2026. Revenue is expected to hit about $130 billion US dollars. That'll be a record. And 17% earnings per share growth is expected in 2026 as well. So not only is Elon Musk bullish, but the average Wall Street analyst is too. As for other companies to watch, Fortescue Metals is one. So the iron ore price has been making waves. In case you weren't aware, the iron ore price is up 6% in 8 days. Now, what's rounding between friends? The iron ore price is actually up 5.6%. Now, Fortescue, a key stock to watch for obvious reasons. Fortescue, as we know, they make most of their money, let's call it 90% from China. Fortescue should definitely be on your radar. Expected to see a pretty sizable bump if a China deal does come to fruition. It's great to have your company. Stay safe, happy trading. See you tomorrow.